After starting off fairly strong today, we did see the S&P 500 and a lot of the other major markets slip into the close and finish in the red. However, the small cap Russell 2000 actually hit yet another all-time high, up over 2% here today. Had some interesting IPOs today as well, with Petco and Poshmark back on the public markets after a successful IPO from Affirmed the other day. And we also have a lot of anticipation about the President-elect Biden's proposed infrastructure bill that is expected to be rolled out here tonight. So a lot of things to discuss there. So we'll take a look at that, see what it means for our posture, then get into our trade application example where I wanted to focus on a cryptocurrency related trade. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's January 14th, 2021. First of all, if you're new, welcome aboard. Remember to go over to our YouTube channel and click subscribe. Once you're over there, go down to the description area and make sure you're also signed up for our email distribution list. So that way you're notified whenever these videos get posted. We also give you some information within those emails, like which stocks in the S&P 500 are giving you overbought and oversold cluster signals. In addition to that, we're heavy users of Twitter. If you're not doing so already, I would encourage you to follow me. My handle is @BrandonVanZ. And we really appreciate those of you that click like and retweet on these Market Outlook related tweets. And then last but not least, we have a presence over on Facebook. Feel free to join our group at the web address you see in the logo in front of you. All right, let's go ahead and dive into the charts here. And as you can see, I've got chart 4B pulled up here in front of us. Now, just as a quick heads up, I discussed this in class earlier today and mentioned it yesterday as well. Be aware, those of you that are premium members that have access to all 50 of our customized charts that we give you, be aware that there's a slight change in the process that Thinkorswim has now when you're importing a shared link. That's brought up a few questions for me via email, and it's going to end up resulting in, unfortunately, me doing a bit more work, and it might require you to go through an upload process again. So I'm just giving you a heads up. I plan to work on that tomorrow, but anyway, I'll try my best to notify you one way or another, possibly email or Telegram or Twitter or what have you. So just put a pin in that, and perhaps over the long holiday weekend here, you'll have another project on your hands, but it's not something I relish doing myself because it creates more work for me, and I also know it can be a little bit aggravating for you if you've recently uploaded our charts. You might end up wanting to do that again. So stay tuned on that. I'll do my best to notify you on that. But anyway, this is chart 4B, and this is just our market forecast 4 grid here, which will look at the 4 major U.S. equity indices with the market forecast technical indicator plotted down below. And as I mentioned in the intro, you can see the S&P 500 finished lower today, down 0.38%. You can see what that candle looks like there, where we closed near the low of the session. Similar story there with the Dow, and similar story there with the NASDAQ, each falling a little bit, but closing near the lows of the session. And that's why the remarkable performance in the small caps is as stunning as it is. Usually these things tend to move in unison with one another, but right now we are seeing that strength in the Russell 2000, and of course that's nothing new. For those of you that have been listening to these videos of David and I's over the last several months, we've already been informing you of that, and of course those of you that attend my factor-based swing trading class are well aware of that as well. In fact, good news to share on that front as well. Many of you premium members would have caught my Telegram trade alert earlier today that the swing trade we just placed yesterday on a small cap stock, sub $500 million company, went up 15% today. We already locked in our maximum gains. So normally when we're doing swing trades, we're thinking we're going to be in the trade for about 3 weeks. So to lock that gain in just one single day, we're thrilled when that can occur. So we were quite happy with that. So anyway, just proves the point that small caps are roaring right now. And it is a place where there's a lot of opportunity. There's also some landmines out there. You got to be a little bit more cautious in the small cap universe because a lot of times they're unknown entities. They're companies that you've never heard of before. But if you're a trader as opposed to an investor, you're probably just caring about the chart, not necessarily what the company does. And there's a lot of great setups out there in the small cap universe right now, and as it should be. You can see here that the Russell 2000 chart looks absolutely gorgeous here, hitting yet another all-time high here today. Now, another thing that I should point out regarding this market forecast setup is naturally all of our charts are still strongly bullish, right? And you guys know that by now, that the background color of these charts will be dark green if we have a strongly bullish posture. And that's been the case for the last 2.5 months for all 4 of these charts. But what we have today is a little bit new. If we were to take a look at the 2 charts on the top, notice the S&P 500, the chart in the upper left, and the Dow Jones Industrial Average, the chart in the upper right. They both have what's known as a bullish intermediate confirmation signal right now. That signal exists when we have a intermediate line that is considered to have a bullish posture. Now, ideally, it's a strongly bullish posture. And remember, a strongly bullish posture occurs when the green line is simply in the upper reversal zone, or it can also occur when it's crossing above 50 towards 80, kind of like was the case with the S&P 500 back here in early November. That would have, at that moment in time, basically November 5th, is when we went to a strongly bullish posture, which is where you can see kind of that shading change on the chart up there from light green to dark green. But anyway, that's one piece of the bullish intermediate confirmation signal, is having a bullish intermediate posture. Now that has to be combined with this red line, the momentum line, in the lower reversal zone on the same day. The lower reversal zone on the market forecast technical indicator is 20. That one, it can't just be falling between the markers. It has to actually be below it. So it makes it a little bit different than what I just discussed there with the green line. Nonetheless, today's kind of setup does give us that indication. Now, you can see that exists not only here on the S&P 500, but we have kind of the same type of setup over here on the Dow Jones as well. Having said that, you'll also know that whenever these signals exist, David and I try to remind you that there are more ideal setups and less ideal setups. And both of these bullish intermediate confirmation signals would be considered of the less ideal variety. What we are looking for are a couple of additional things to kind of tack on to those signals. And one of those things is the blue near-term line. What we've noticed historically is that if this buy the dip signal is going to be a good one, you want a healthy enough exhale. And the blue line, which we use in my swing trading classes, helps provide that information to us. And you can see here that, yes, we did have a dip of sorts here today in both of those charts, but I think a lot of us would agree that's not a healthy dip. It's a very small dip. It didn't even bring us back to even close to the moving average itself. So it's possible we get another day or two of downside activity there for those of you that are wanting a little bit better setup there. So that's one of the things. Notice that the blue lines, and you can read the labels here to identify that if you're having a hard time seeing exactly where the blue line is on the indicator. But notice that the near-term line is at 57 on the S&P 500, and it's just a hair above 50 on the Dow Jones. What we're looking for the ideal setups is a blue line between 50 and 20. So each one of those is just a hair above where we would ideally like to see it. And then one other thing I would mention is that in the case of this red momentum line on the Dow Jones, notice that its reading currently is 2. Usually there's kind of an extreme reading that we're looking for on that line, and that level is kind of 5 and below. So in this particular case, we would also say this is a less ideal setup because you have a little bit more of an extreme dip right there in the red line at the end of the day. So anyway, I thought I would point out the fact that we do have 2 bullish intermediate confirmation signals here today, but neither one would be considered ideal. So how you choose to handle that is up to you as always, but one idea would be maybe you do half the contracts you normally would with whatever your bullish trade would have been, or reduce your position size in some way, or hedge your trade, or what have you. It's just you don't want to get too aggressive when the signal's not ideal. All right, let's go ahead and by the way, I should also point out that the Dow Jones Industrial Average and the NASDAQ both hit all-time highs today on an intraday basis. So they didn't close strong the way that the Russell 2000 did, but they did at least put in a brand new high here earlier in the session. All right, let's go ahead and take a look at our 3 green arrow setup now. This will be chart 4D. And as we're looking at this here, you can see that the background colors of this particular chart setup are all this lighter green color, and that is identifying for us that we have what's known as a 3 green arrow signal when using 3 different technical indicators, the 30-day moving average, MACD histogram, and the stochastic, to try to identify whether those indicators would be considered bullish all at the same time. So right now, all of them do show us those green arrows across the board. So kind of a clean sweep right here that kind of suggests that this is a better than average time to be considering trend trading. And I think those of you that attend my Monday top-down trend trading class can absolutely confirm that. Just mentioning to my Q&A session class today that it seems like every day I pull that account up, it's higher and higher and higher. It is very peculiar, and when that ends, I don't know. I'll enjoy it while it's going on, though, and we've had a really, really good run of things here in the last several months. So anyway, we'll see if we can keep on pushing our luck in that class. And right now, the charts do not identify any sort of a breakdown in trend, so I'm not going to be bold enough to say that that's going to end tomorrow or the next day or anything along those lines. We'll read the charts and adjust as necessary when the charts change. And right now, it is steady as she goes to the upside. All right, let's go ahead and now let me pop over to the internet real quick. Kind of get this out of the way. I appreciate those of you that clicked like for me the last time around there on Twitter. We got exactly to my triple digits there of 100. So I always aim to get to that level. In fact, that brings up another point on this area of our website. From the video on the 12th when I did it last on Tuesday, I did get a question. On these blogs, it's a little bit harder to find the questions and comments and things like that. But if you scroll all the way to the bottom of it, I did get a question from David Sagert there. And so, David, if you're listening, be aware that I did answer you down below here. His question was mostly around Twitter and social media, and of course, that's been in the news quite a bit here recently, and was mentioning that I understand his concerns, and was kind of mentioning to him why we use social media as an organization and the benefits that we receive from that, and why we do regularly encourage you guys to help promote us there, because we're a small business, and it's an easy way of marketing our information. And we think that the 2 to 3 hours that we give up out of our day each time we decide to do these videos for free on YouTube should be worth at least a 5-second click of the word like for those of you that have access to those social media accounts. I know not all of you do, but we also know that way more of you have Twitter accounts than actually click like. I know that because I did a kind of a promotion once, and there were over 300 of you that when I said I was going to give you something, you clicked like, and it wasn't a problem at all. But in just a normal request like David and I do regularly, we're lucky to get to 100 people that are willing to give us the 5 seconds to do that. So we always try to be upfront with you as to why we use social media, and help encourage you to help support us there. And that way, if we ever change our policy about how often we do these free videos on YouTube, you guys aren't caught by surprise there, right? We ask you along the way to support us, and so many of you do that, and we are highly thankful of that. Now, again, if those of you that are premium members are kind of listening to this and wondering, well, does that mean if you're not going to do these videos in the future for the free people on YouTube, does that mean that we are kind of out of luck there as well? And of course not. Those of you that are our premium members that pay us money, we're going to continue to work for you and do different things in the future if it comes to that. And it's not like we're at that point here at all. By the way, it's not anything like that. I was just merely answering David's question there. And naturally, we all have a limited amount of time in the day to spend. What David and I do is not a charity, right? We run a business, and so we kind of operate under this, freemium model, as it were, where we give some information away for free, like we do here on YouTube. But how we actually make money is through our subscription service itself, right? We make absolutely no money whatsoever doing this YouTube video every day. There are other people that kind of have small businesses like us that they might force you to watch some advertising or different things like that when you are watching their videos. We don't force you to do that. This is an entirely charitable or voluntary action on our part, just to help get the word out about our business. So thanks for understanding that, and thanks for all of your support along the way. You guys do a great job to help us, and we can't thank you enough. Also, I should mention that we had a great session here earlier today with my question and answer class, and so those of you that are premium members, I will tell you that today's class had a little bit of a different feel to it. A lot of times in these Q&A sessions, you can kind of think of them as a Ask Me Anything session, and it turns into, hey, Brandon, what do you think about this stock, right? Somebody wants to bounce a trade idea off of me. Today's class was a little bit different because a lot of it was revolving around, hey, can you explain the various tools that you're using for your classes? So did want to point that out in case some of you premium members haven't stopped by and checked out a class here recently. Today would have been a good one for you to get into kind of the more granular details. So things like how do we do industry rankings for our stock selector spreadsheet, and how do we get the P&L column to pull up on Thinkorswim. And I did a deep dive on the new Google Sheets tool that I have, and showed some folks how to import some scripts to the custom column headers on Thinkorswim. We also talked about some position size management and the idea of having coffee can stocks, right? We've got 6 companies that we've now doubled our money on in that particular account that we're managing kind of slightly differently than we do with all of the other stocks in our portfolio. We also had a review of a utility stock in there, and then also had an explanation of our dividend stair-step chart and how I come up with the numbers that feed into the average high yield and the average low yield. So a lot of good stuff there that we covered today. If any of that interests you and you are a premium member of our organization, feel free to check out that video from my class earlier today. David taught his portfolio management with ETFs class, and then tomorrow David's got his technical analysis class at 1 p.m. Eastern time, so make sure you check that out as well. All right, let's go ahead and get back on track here with some more Thinkorswim charts. I'm going to pop on over here to our 12 grid analysis now. Let's do chart 5A in this case. This is our asset class 12 grid. So as a reminder, when we're looking at these 12 grids here, the background colors of the charts are going to tell you what the current intermediate posture is for those securities. If the background color is dark green, it means that we have a strongly bullish posture. If it's light green, it means we have a weakly bullish posture. If it's dark pink, it means we have a strongly bearish posture. And if it's light pink, we have a weakly bearish posture. So we don't have any light pink ones on the board here in front of us immediately, but we do have the other 3 colors as you can see. So let's see what was kind of moving here in the markets today. First of all, we've been spending a lot of time on the US dollar lately. You'll notice that the dollar was down today. It was down 0.21%. However, the background color of the chart stays that kind of light green color because we still have a weekly bullish posture. It's the intermediate green line on the market forecast is at 32 and rising. And therefore, that is good enough for our purposes of calling it weekly bullish. Now, you look at that chart and you understand why it's called weekly bullish and not strongly bullish, because there's still a lot of question marks around that. And you got to kind of tread carefully if you're deciding to take a bullish trade there. I'm still a bit hesitant there, and I still think my path of least resistance is to assume that the dollar will head lower. But I also recognize what I mentioned, either the last time I did the video or the time before that, we've kind of entered into some oversold territory here, right? We've seen these little green dots starting to show up telling us that, hey, we got to a little bit of an oversold area within the market. So could it kind of maintain some kind of sideways action here for a while in the US dollar? I think that's a possibility. Will it kind of have this major reversal to the upside now that we have a weekly bullish posture? There I'm not so sold. So I'm still moving forward with the mindset that this is going to be more of a weaker dollar environment. And if that changes, I'll, of course, let you know. But as you are aware, when the dollar is weak, that sets up a little bit more success for commodities and also foreign ETFs and foreign stocks and things like that. Now, with the dollar being down today, you'll see that mostly played through. It did not necessarily play through for gold, which currently has a strongly bearish posture, and gold was down just fractionally here today, not much. It was basically flat. But you did see oil up again today, at least USO, if you were using that as your proxy, was able to push a little bit higher. And we've been talking about this chart a lot. That's a great looking chart right there. Some of those commodities coming back to life. In addition to that, with the dollar being down today, no surprise that foreign stocks were up today. Notice that EFA, which tracks the developed foreign stocks, was up 0.8%, and EEM, which tracks the emerging market stocks, was up 0.93%. Now again, compare that to what happened in the United States, where we actually had a down day, and we had another bout of relative outperformance in those foreign securities. That's an area that I know David has really been hitting hard within his portfolio management with ETFs class that he teaches on Thursdays. So if you've had difficulties with selecting foreign investments in the past and wondering how that can make some impact on your portfolio, I would encourage you to check out his recordings from those Thursday classes. In addition to that, we also had quite the big move here today in Bitcoin. So notice this chart in the middle rung off to the right-hand side is Bitcoin. The chart itself is a little choppier because naturally Bitcoin has just not been something that's been around quite as often as these other securities out there. So it's a little bit harder to track in terms of finding indexes and things like that. Now, just as a heads up, I should have probably mentioned this on Tuesday because it was already set up that way at that time. But I actually replaced real estate here with Bitcoin. Now, the reason behind that is when we initially launched these 12 grids several years ago, real estate was not necessarily considered its own sector at that time. So we kind of viewed it as almost like an alternative asset class. So it'd make it a little bit more appropriate for this particular 12 grid here. But as the years have rolled on, real estate has kind of been extracted out of the financial sector, and now real estate is its own sector. And so as you guys know, and we have our sector 12 grid that we'll look at here in a little bit, real estate is part of that separately. So it didn't really make sense to have two slots allocated to real estate. So I figured let's swap it out for Bitcoin since it's getting a lot more popular here more recently. And you can see Bitcoin was up about 3% today, and is very close to its all-time high that it achieved about a week ago. It's back up there close to $40,000 already out of the gate. And so you can see what that chart looks like there. This is an asset class that has been absolutely on fire here for the last several months, up 238% over that time period there. But obviously there's a lot of danger in that as well, right? There's a lot more risk and unknowns when you're dealing with those cryptocurrencies. But right now, that's a very hot area of the financial markets, and put a pin in that because our trade application example is going to kind of weave its way into that conversation a little bit later on in tonight's video as well. In terms of the charts that are negative here, you can see we have these three kind of darker pink shaded background colored charts there. I talked about gold a little bit already. I'm not overly concerned with that one. That one, as I mentioned on Tuesday, I just kind of consider as a more of a chop and slop type of a chart. So it's trying to decide where it wants to go. It's not a strongly trending security either up or down. It is just kind of chopping right now. On the other hand, if you look at TLT, this chart in the middle rung off to the left-hand side here, this is a situation where we have a really strong downtrend in place. And remember, we're perfectly comfortable with that in this particular presentation, as I have a bearish trade going on this right now for this trade application example that I did a few weeks back. So for me, I'm fine. Keep on letting those bond prices fall. It doesn't bother me in the slightest. How far they'll go down, I don't quite know. Like I mentioned on Tuesday, don't be surprised if we get some sort of a reversion to the mean type of a move here now that we have this oversold cluster signal. Well, we actually had the beginnings of that yesterday, right? On Tuesday, I would have told you that on this candle right here. The very next day, we actually had a pretty strong pop out of long-term U.S. Treasuries, but we gave it all back here today, and it looks like it's rolling over yet again. This was a really strong down move today. For bonds, it was down almost 1% there. So that's a direct result of interest rates continuing to chug a bit higher here. As you can see in the chart in the lower right-hand corner, that's our 10-year U.S. Treasury yield. And remember, you can move that decimal point over to the left one to determine what is the current interest rate on a 10-year government bond. And at this moment in time, it's at about 1.12%. So it is over 1%. And we're basically at our highest levels since going back to last spring. So we have seen a decided increase in interest rates, which have really helped along things like banks, brokers, insurance companies, and the like. All right, that's a good segue. Speaking of sectors, let's go ahead and pop on over here to our Sector 12 grid. That's going to be chart 5C for those of you that are following along at home. All right, as we look at this chart here, this 12 grid, you'll notice that there are two pink charts on the board. We've got communications up top, and we've got the staples down below. And the communications, as I mentioned to you on Tuesday, it is my belief that the reason that the communication sector is breaking down here all of a sudden is because of, going back to David Sager's question to me or comment to me, what's happening with social media. Remember, social media is a very, very important component of the communications sector these days. Those of you that know the history of the sector will know that it used to represent telecom. So think about AT&T and Verizon. Now, those two big telephone companies are still in the communications sector, but they no longer call it telecom. They now have broadened it out to communications more generally speaking, and they took stocks like Facebook and Twitter and Google/Alphabet and others, even some discretionary companies like Disney and Fox and some of those media companies, and put them together in the communications sector. So there's a lot of controversy around those types of companies right now and some of the freedoms that they have. And obviously, this is not a politically driven presentation. I myself am not hardcore Republican or hardcore Democrat, so I don't get into those conversations much. But I also know that many of you like to fight back and forth with one another on those points. And there are legitimate points on both sides of that debate. So I'm not here to say one way or another. You guys can all make up your mind on that. All I'm here to do is interpret how the stock market sees it. And right now, the stock market sees it somewhat negatively. Stocks like Twitter have sold off here in the last week in this very controversial period that we're in. And I think that is really starting to weigh on the communications sector here. You can see it is breaking down. Remember, prior to this, if we were to look at the end of 2020, the communication sector was actually one of the strongest out there. So this is quite the interesting reversal that is taking place here. And all of a sudden, we are trading basically back to these levels where we were back in late November. It's not the end of the world, but remember, if there is ever some sort of a major meltdown in any chart, it's got to start with breaking of support somewhere. So we can make the claim that in the last 2 or 3 weeks, we do have lower highs and lower lows, and we are breaking some reasonably strong levels of support on communication. So that's an area where you got to be a little bit more cautious if you're entering into those types of securities. In terms of the staples, I think that's more of a story that this is still a market that's willing to kind of take on risk. The staples usually are kind of a go-to area if the market has nervousness around it. And right now, this is a risk-taking environment. I mentioned Petco and Poshmark. Those are stocks that IPO'd here today that I was mentioning on Twitter, with Petco at least, with a really funny ticker symbol, WOOF, that used to be owned by a veterinary company that eventually got bought out. So anyway, easy to remember Petco these days with ticker symbol WOOF, but it was up over 60% today, and then Poshmark was up like 100%. So Affirmed the other day was up over 100%. So we're in this environment where those really risky kind of growth-oriented new stock types of situations are capturing the market's imagination, and therefore the market's not overly enthusiastic about companies like General Mills or Kellogg's or something along those lines. The other charts on the board all have some sort of green shading to them. The utilities and real estate have the light green shading, so we're not overly enthusiastic about those two from a trending perspective, but all the rest of the charts do have the dark green background color. And as you can look at the rest of them, they all look pretty good. Now, what's interesting to point out is that the two companies that I've been discussing in these presentations here recently, and we also had a great conversation yesterday in my factor-based swing trading class about banks and oil stocks, those were a couple of the stronger areas yet again today. That has been the decided tone of 2021. And remember, that is worth pointing out because that was not the case in the years leading up to 2021. So it's a change of thought from the marketplace. And you can see energy stocks were up nearly 3% here today, and financials were up about 0.5%, whereas most of the rest of the stock market was down here today. So anyway, communications lagged today, energy stocks to the upside. Let's talk about our trade application example now. So a little bit of a different type of a trade application for those of you that have been in my classes over time. I haven't been one that's gotten into cryptocurrencies all that much. For a while there, I was doing kind of the strategy lab thing where we were tracking a portfolio of cryptocurrencies, but the difficult thing has been getting cryptocurrency-related stocks to trade, right? A lot of times you can buy cryptocurrencies themselves off of places like Square or PayPal or what have you, but it's hard to actually trade them within your, let's say, TD Ameritrade account. So you have to kind of get creative, and as this space has kind of gained popularity over the years, there's been a few more stocks that have popped up on the radar. You know, one of the stocks that we've talked about in my classes in the past has been MicroStrategy. That's been an interesting case where they've been putting Bitcoin on their company balance sheet, so that stock has really benefited as a result of that. There's a few other that are out there. I mentioned Square before. You know, Square's done well over time. So anyway, there's a few areas where you can kind of get a little bit of exposure there. But this particular security right here will give you direct exposure. Now, it might not be quite as crystal clear as you want because this is a fund that invests in Ethereum, which is another one of these cryptocurrencies that is probably one of the more popular cryptocurrencies out there outside of Bitcoin. I would call Ethereum probably in the top 3 of cryptocurrencies as far as their popularity. And there is this fund, the Grayscale fund. The Grayscale also has a Bitcoin fund that tracks Ethereum. Now, I haven't looked into it myself, but I would assume that there is still the challenge of the premium that you have to deal with here. That's always been the challenge with the Grayscale Bitcoin product, is that it trades at an extreme premium to the actual Bitcoins that it owns. But because it's the only game in town, the premium is effectively warranted. So just be aware, I am trading this Ethereum Grayscale ETH here, I guess is what they call it, instead of an ETN or an ETF. But I'm trading it as a short-term trade. This is not, hey, I want to buy Ethereum, and so this is how I'm going to do it, and I'm just going to buy and close my eyes. It's just not necessarily my style. Not to say that there's anything wrong with that, but because of the premium conversation, you might wake up one day and find that it could rip lower down the charts on you if there is a competing product that doesn't have as big of a premium, right? Another ETF that gets approved or something along those lines. So this is not one that I'm necessarily saying, hey, you buy it here and you just hold it forever type of a thing. But I wanted to at least kind of open my mind to the possibility of trading some of these assets here. And one way to go about that is through a swing trading mindset. In other words, you recognize some sort of a bounce that's taking place on the chart, and you're willing to kind of take a roll of the dice, so to speak, to see if it plays out. And if you're wrong, you're going to use your stop losses to get you out of the trade sooner rather than later. So it doesn't guarantee success, but what it does is it helps you define your risk for some sort of, black swan scenario that might come out of nowhere, months down the road otherwise. So anyway, as you can see here, this ticker symbol ETHE has had a nice little bounce here in the last couple of sessions. It was up about 10% today. And remember, I've already done this trade. I already sent it out to you guys earlier in the normal trading session to give those of you that are our premium members a slight advantage over those that are just watching the free YouTube video. So remember, make sure you're checking that information in our Telegram Trade Alerts app that we make available to you. But anyway, I did the trade already, so we're in the trade, and you can kind of see where my zones are here. I'm just doing a normal one-for-one reward risk relationship here. And I put our stop loss a little bit below this candle over here on December 10th. And that means that if I wanted to shoot for a one-for-one relationship, that would put our price target up here closer to about $17 or thereabout. So that does require us to get back up and over that rising moving average. In fact, it does require us to get back up and over this candle from January 7th as well. So no guarantees that's going to happen naturally. But because these assets are in the news a lot more, there's a lot of momentum behind them. There's a lot of people that are playing these types of securities. And right now, after a day when it was up 10%, this might be a time where people are trying to plug into that. And part of it might be, too, that, the idea that the $1.9 trillion, infrastructure plan that might be proposed tonight could end up having an inflationary effect upon the U.S. dollar, and people might be looking towards alternative currencies to kind of get away from that inflationary deterioration of the dollar. So that could be part of the story that we're dealing with here. But I figured let's do something a little bit different here this time and kind of dive into some of those cryptocurrencies a little bit. And so that's the way that I'm going to go about it. Remember, this is a security that trades a lot, but it does not have options availability. So notice that there were 6.7 million contracts, or not contracts, but shares that were traded here today. So this is definitely a liquid security. Interestingly enough, after hours, it is not liquid. So notice that the bid is $12, the ask is $16 after hours. But in the middle of the day, it is highly liquid. This is way more liquid than normal, even mid-cap types of companies. But you'll notice down below here, it's kind of blank because this has no options. Normally, you would see your options chain here. So if you're going to play this one, unfortunately, there's not a way to do it through the options world right now. You would have to just kind of buy the individual shares themselves, like I showed you here with the swing trade idea tonight. So that's what I had for you. Hope you got some value out of tonight's presentation. Hope some of you like the idea that I'm kind of looking at some cryptocurrency related trades there. I know that's been a hot topic amongst a lot of people out there. And so if you got value out of the video here tonight and you want us to continue to do these videos as often as possible in the future and give up our time throughout the day to do that, then we ask one simple thing for you. Help support the video. And for those of you that are on Twitter, what we'd love to see is those of you that are on Twitter to click like for us to lend us your support. So thank you to those of you that do that each and every day. Remember, David's got his technical analysis class tomorrow, and then we'll get into the weekend as well, where I'll get my stock selector tool updated and perhaps some of those tutorial videos updated for those of you that are premium members. Stay tuned on that. Check your email. And remember, for those of you that were our original members from back in 2018, we have that discount going on right now for your renewal for the additional 3 years coming up. So if you didn't get that email, make sure you send us an email on that as well. All right, with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.